our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody. Welcome back to another live stream. And what a day it has been already. Crazy volatility in the markets. And for good reason, we have several things on the watch list here today. Couple obvious things we've got to talk about. We've got to talk about, of course, the UK. We've got to talk about the S&B. I mean, we just had a slew of economic stuff come out overnight for me, for many of you guys. Of course, it was throughout your day. But oh my goodness, guys, the one big thing that happened is that we had the Bank of England raise rates by 25 basis points further than what was expected. This is a huge surprise. Well, I should say it's a big surprise, but it is following yesterday's really red hot inflation numbers. So it's kind of like the Bank of England got backed into a corner and they decided to go 25 basis points additional to what was expected. So here's some context. If you're watching the pound, you notice that there was a ginormous intraday spike all in this single candle right here. You can see we had at 7 a.m. my time, the Bank of England rose rates, hiked rates by 50 basis points. This caused a surprise to the market, shot things up, things came back down, and we've just been trading back and forth since. This is a really big deal because, again, the Bank of England did this in response to yesterday's CPI number, which came out at 8.7% inflation. We had very high inflation yesterday, come out higher than expected. It was expected to come out at 8.4. We got 8.7%. This is a stubbornly high inflation number. And so what we saw is the UK or the pound react very positively to that. Why would it respond positively? Well, again, because of what happened today. When you get high levels of inflation, this is a key story right here for us to learn something. If you're newer to fundamentals, I want you to understand something very, very clearly today. Yesterday's inflation number drove the price of the pound higher on higher than expected inflation. This is why fundamentals matter, guys. Yesterday's inflation reading was red hot. The market bought the pound because today's number came out for the interest rate decision, which was a hike. So because the inflation number was high, the interest rate decision was poked up to 50 basis points, causing a, again, increase in the value of the pound or compared to other currencies like the dollar. Okay, so this is really important stuff because, again, when we're talking about currencies, it's all about the central banks and their monetary policy decisions. We've got to talk about a lot of things today. We've also got to talk about, of course, the SNB, the Swiss National Bank, which chose to raise rates as well. We also had the Turkish lira, which just went parabolic. Well, I'm sorry, it actually dropped off the face of the earth compared to the US dollar. Let's take a look at this. The USTRY, this is the Turkish lira. And you might say, well, that went up. Well, here's the Turkish lira quoted against the dollar. And you can see it's the opposite, right? So the Turkish lira lost a tremendous amount of value because essentially we saw rates go up, but not nearly as much as the market was expecting. And so this is some very volatile stuff here today. We're seeing lots of market moves. And by the way, you guys, this Turkish lira move is a 2.57% on a currency pair. This is incredibly volatile stuff that's going on right now for the Turkish lira. If anybody trades it, oh my goodness. So we've got to talk about lots of stuff here today. It is a very action-packed day today, but I want to take things one thing at a time. So let's talk about the pound. Am I a buyer of the pound? Well, it just looks bullish. I've got to be honest, I like the idea of buying dips on the pound. If this thing does come back into play, I'll be interested in picking it up on the long side. And continuing to be bullish on this thing. I mean, this chart is beautiful. We've got a nice upward trend. The trend line traders will love this kind of concept, right? They've got that nice upward trajectory overall. The market structure traders will love this. You've got higher lows and higher highs coming into this market. I would say that the pound dollar, until something breaks on this upward trend, looks very, very good in my personal opinion. And this is a 4-hour chart. So of course, there might be something we could even find on the lower time frames. If you're trading the pound against the US dollar here today, again, we've got our previous resistance. I'm sorry, our previous high. I've got it marked in this dotted line here. But again, support was found around this area. And now we get kind of the early formations of a possible inverted head and shoulders following the announcement of the rate hike today. So really volatile stuff here. And in my opinion, again, more upside for the pound is possible. And if you're a day trader out there, guys, if you're looking at the pound, you're saying, okay, 4-hour chart, I get it. But what about the lower time frames? Well, here's my take. I think if we can break through this level, this becomes a pretty solid level of support for us to go back and retest those highs more in depth. And so what I mean by that is if we look left on this pound USD chart, we've got resistance, resistance, resistance. If we're able to close above this, so for example, if we break this and we have, let's say, a nice strong, we're looking at the 1-hour candle. Let's say we get a 1-hour chart that closes real nice, real strong, perhaps somewhere within this wick that we just made. If we close in that, I think you have potential to drive back up to the previous highs. And again, the pound USD looks strong. It has looked strong. The fundamentals look really good, and we've been bullish on it because of that, right? The UK has a really high inflation problem. Their central bank looks like it needs to stay higher for longer, stay hawkish to get this inflation problem under control. That's somewhat contrarian or contrary to the US, the Federal Reserve, which looks like, again, they may raise one more time, but it's looking like they're at sort of the ending point of their interest rate cycle. Why do I mention that so much? Well, because you guys know I trade indices and gold a lot, and those markets pay close attention to what that Federal Reserve is up to. So that's what we're here for. If you guys enjoy the channel, if you enjoy the streams, do me a quick favor. Hit that thumbs up button down below if you guys are enjoying the content here. If this stuff is helpful to you, if you're trying to learn fundamentals, if you're trying to get your daily fix, your updates, whatever, this show is for you. We do this for the people. We love being here. And if you enjoy this stuff as much as we do, and if this is helpful to you in any way, shape, or form, it's totally free, but we do ask that you thank the stream by hitting that thumbs up button and letting us know that you're getting value out of this content. So let's talk about GJ, right? Another pair that I personally really like on the long side as well. So similar story here, right? We've got our zones marked. Same concept. If you want something more volatile, keep an eye on the pound yen, which tends to move much more per day than the pound against the US dollar. So we crested up into this 181.60 level. Past resistance got tagged, and we saw some initial reaction. Again, ping-ponging in both directions, responding to the Bank of England's decision to raise by 50 basis points. The question, however, in my view, would be, can we get a break back above this previous high? Because if that happens, I'm a buyer on pullbacks, right? So that's what I'm looking for today when looking at the pound US dollar. Let's talk about another central bank very quickly. The Swiss National Bank decided to raise interest rates. This didn't come as too much of a surprise. We saw, again, Swiss National Bank policy rate came out at 1.75. They raised their rates. Of course, this was compared to the previous 1.5, a 25 basis point rate hike, which is a big deal for the Swiss National Bank. They typically are a very conservative sort of central bank. They look to aim for low inflation levels. I think sub 22% is their kind of target. So yeah, it's an interesting move from the Swiss National Bank, again, to keep that inflation number for them under control. It's much more modest than perhaps other places like, again, the UK. And so we'll keep an eye on that. If you watch Swiss pairs, we do cover that. Bitcoin, it actually is getting a buy rating on the EDGEFINDER right now. I don't know if you guys trade Bitcoin, but a quick look at Bitcoin. We've got to talk about it for a second. Bitcoin has had a really impressive run. And I own Bitcoin. So let me see if I can show you guys what's left of my position. I did sell some of my Bitcoin position. Let me make sure I log in here. So I'm long Bitcoin. I have been long, and my entry point is around 28,752. Now, at this point, I do not own a full single coin. Um, per Bitcoin, I have at this point only now 0.23 coins. At one point, this position for me was just about zero point 0.6 Bitcoin. I have sold more than half of it at this point. And by the way, guys, we do have unemployment claims coming out. Let me follow up on that. Sorry for that. It came out pretty much just as expected. 264,000 unemployment claims compared to 261, which was the forecast. We'll take a quick look at the dollar, see if there's any volatility there. Drop it down to a lower time frame, and we're not seeing too much. So not too big of a move. A little bit of a blip to the downside for DXY. So we're not really seeing too much volatility. Euro dollar making a quick blip to the upside, but nothing of substance, I would say here. And again, this is what happens when you get numbers that come out just as expected. So nothing too surprising. However, again, I'm still very focused on all the other unexpected stuff that we had. UK, Bitcoin. There's so much for us to talk about here. And like I said, if you guys are enjoying the stream, hit that thumbs up button. I'm going to try and cover as much as I can for you here in this video or in the stream as I possibly can, because there's just so much stuff that happened this morning. I mean, it was like last week's volatility in terms of news all over again. We had several things. Anyways, Bitcoin, quick update for those of you guys who look at it or trade it. Or maybe you don't trade it, but you just want to know what's happening. Well, Bitcoin got a nice buzz to the upside because Jerome Powell actually mentioned that some sort of soft tones on Bitcoin in his speech to Congress yesterday. I can't remember the exact quote, and I don't want to try and quote him by any means, but the general consensus or the commentary that he had on Bitcoin was that they view it somewhat as money, but that a real money a final form of money involves the central bank in some ways. So it's kind of an interesting comment from Jerome Powell. It gave a little bit of lift to Bitcoin. But on top of that, we also saw some really interesting stuff out of Wall Street. Central banks, I'm sorry, not central banks, hedge funds, of course, the whole of Wall Street was kind of interested by this concept that BlackRock may be launching an ETF for Bitcoin on the stock exchange. That's really big stuff because, of course, there's ETFs for everything. If you don't know what an ETF is, it is, of course, an exchange traded fund. You can buy gold shares, right, essentially on the stock market. You could buy silver, which is something that I trade often, right? I've sold a put on this one recently. So very interesting stuff. To see Bitcoin potentially joining the fray, I guess, is very, very interesting. Anyways, guys, speaking of gold and silver, let's make sure to get some coverage on that going on. We've got the 4-hour chart pulled up, and you can see what a messy chart, right? The 4-hour chart just looks so ugly. It's just back and forth. And again, the question is gold bullish or bearish, right? And that's, of course, the question every day on all assets. Is it bullish? Is it bearish? Well, I had a great conversation yesterday with Gary from Traders Network Club. He came on the show and we talked about gold and how, essentially we broke out of a really key spot for me on this chart. I mean, if I'm looking at the daily chart and I scroll out for you guys here, we've talked about, and trust me, I'm not the biggest trend line trader. Like, I don't place all my trades based on trend lines, but this trend line is pretty apparent. Off the daily chart, you had this really longer term upward trend, and we're sort of falling out of that upward trajectory. It's really concerning because, again, Frank and I have been watching gold for the last several weeks together, thinking that this consolidation zone would sort of turn into something, and it just hasn't. We just have not seen that. Again, today, this is more testament to what we've been talking about with the gold market. It's paying attention to other things than just the US Federal Reserve. Today, the central bank in England, right, the Bank of England, rose, or they hiked their interest rates. And we saw gold actually respond to that. So if I drop it down to the 5-minute chart, you can see that around the time, 7 a.m., 7 a.m. comes around, we see actually the gold market, along with the rate hike, the sudden rate hike, come down. Same with the Swiss National Bank. Now we've popped off of those lows, but the point is gold is paying attention to other central banks on top of just the Federal Reserve now. It's an interesting time, to say the least, for the gold market. But again, for me, when I look at this chart, this one's tough for me because, again, it's not trending the way I like to trade, right? I like to trade things when they're trending well. So this one is not really something I can really get interested in until we start to see breakouts. And again, I want to be a buyer of gold. I do like the story. I think that, at least in the US, central bank stuff will continue to soften, and it could give lift to gold markets. But again, the gold market is paying attention to beyond just the Federal Reserve. We see other central banks remaining relatively hawkish, and keeping rates very high. So again, it puts a little bit of a suppressant on the gold market. However, I do want to talk about a market that is very much benefiting overall from the central banks softening tone. That is the US equities market, the indices world, which is, of course, as many of you guys may know, my favorite thing to trade in the world, especially when it's trending well. However, I do have a trade. It's underwater right now, but this is off the back of several winning trades that I've been able to take recently off the indices. Now, full transparency, nothing works all the time, but things work really nicely when things are trending up in the markets for me, because again, I love trading those trends. I love buying pullbacks. And so things have been really good recently for the indices. I did pick up a position yesterday. I actually did that on stream while Frank and I were talking. For those of you who were here yesterday, by the way, if you guys were here yesterday when I took the S&P trade, comment, I was here. Let me see. Like, I'm just curious how many of you guys, watched that in depth with the stream. Like, how many of you guys stuck around? And look at this. I mean, again, it's underwater, but I'm only going to take a loss on this trade if we break through these lows, right? So we had market structure looking left. So this is my SPY position. I buy the ETF because I can't trade CFDs as a US client. So I just trade it as an ETF. You could also do the futures market, but I just prefer the ETF world. I like shares. It's easy for me to understand. And just what I've always done. Anyways, so price came down to this level. I picked it up. I may have been a bit earlier, but I really don't care what this thing does in the interim. But if it does break through these lows, that's going to be my signal to go ahead and get out of this trade and take a loss. So I'm floating a $293 trade to the downside. So it really hasn't moved much on this position, but I'm going to give it some time. We'll see how things play out. Lots of you guys were here. This is awesome. Very, very cool. Good to see everybody in the chat. Also, do me a quick favor, guys. Do you guys trade indices? Type yes or no in the chat if you trade indices. I will say a lot of people really don't like the indices because they trade on Forex brokers that have ginormous contract sizes. Just so you know, guys, when you trade like US 30, right? People hear the word US 30 and they're like, oh my gosh, that thing is a dangerous thing. And it is when you trade on Forex broker CFDs that are like really ginormous. So you take a position on US 30 and it's like instantly up or down $50. That is just specific to US 30 CFDs. When you trade the actual Dow Jones, you can take a much smaller position and it moves very little. So just something to know. For those of you guys who are in the US, I do have a preferred broker if you guys would like to check out Webull. In fact, maybe we'll, I don't know. Let me know, Chandler, if we have that Webull video loaded into StreamYard here. You can either Discord message me or put it in the chat, either way. But in a few moments, we will be having Migo and Marco join us, which I'm excited to do. We do. Okay, cool. So I'm going to show you guys something real quick in case for those of you who are US people who want to trade indices. I've got something cool to show you. Real quick, I'm going to let that play. We'll come right back after this quick commercial break. Check it out. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. Cool. And there you go, guys. I grabbed the link for you. That link right there will let you sign up for Webull, and you get free shares when you sign up. So for my US friends, that is available to you there in the chat in case you are looking to trade indices. Again, it's a game changer because we can't trade CFDs on regulated brokers. So I do try and make that announcement for people who are interested. So yes, let's see. Again, it hasn't moved too much from my initial position. We'll perhaps come back to the indices here. Another one that's crazy is silver. Silver has just dropped off a cliff recently. You can see here's the hourly chart, and yeah, it's been a really rough ride for silver bulls out there. It's just plummeted here. Gold and silver markets just absolutely getting hammered. Again, part of the reason for this is we had a couple things. The PBOC, the People's Bank of China, cut their interest rates. They cut their interest rates, and part of that, why that's potentially bearish for the metals market, is that China is one of the lead users of metal, right? Copper, silver. They use those things in surplus as they are sort of an export economy, and they use raw materials. So, anyways, silver has been plummeting off of slowing economy stuff, concerns around China. So yeah, U.S. jobless claims have gone higher. Let's go take a look, make sure we are up to date with that. I'm just going to refresh the page here. So again, we had 264,000 unemployment claims compared to 261K. So not too much of a surprise there. We do have, by the way, Jerome Powell testifying in just a bit. So we will we'll of course have some coverage for you coming out later today to keep you guys in the loop about that. And again, remember, if you are enjoying the stream, if you enjoy our commentary, got a lot of great people working really hard to give you guys this coverage that you're seeing on the channel. So hit that thumbs up button if you do appreciate our work, and know that we do also appreciate you guys. We have euro dollar pulled up, and wow, euro dollar was able to actually break through. This is such a clean technical chart, I've got to say, in terms of for my preference. This is just a beautiful bullish uptrend. And I want to show you guys some stuff. When we take a look at the smart money tracker, this might be useful information to some people. So smart money tracker, in terms of the COT data, we could take a look at what institutional money is buying and selling. And what you'll notice is that the euro is pretty dang up there. The US dollar is also up there, but lesser so than the euro. Here's the pound, New Zealand, and feel free to pause the stream if you'd like to take a look at whatever assets we have pulled up here. We also do, of course, still have, and the way to read this really quick, guys, is the ones that are on the far left here are the most bearish assets in terms of positioning from smart money institutional traders, according to the COT data. And the flip side over here, these are your most bullish assets. You have the Nikkei, you have gold, you have euro. And so a lot of traders have been very confused. We've talked about this with the gold perspective. A lot of traders have been very confused by the fact that gold, in terms of institutional holdings, is very, very bullish, yet the chart looks terrible. It looks so down. Remember that oftentimes institutional traders are not necessarily day traders and scalpers and anything like that. Oftentimes they're building positions over stretches of time, weeks to months, and they're building and accumulating and distributing and buying trends and things like that. So again, I don't claim to be the spokesperson of smart money by any means, but we can see that their positions are still net long. And so that's something to consider. For me, that means I'm probably not going to be looking to short gold because, again, there's a big holders. The ones holding the bag are, professional hedge fund managers. So I'm not looking to short against them personally. So anyways, feel free to take a look at any of this data here. We'll take a quick look at retail sentiment as well. Here's retail sentiment. COT data is one side of it, but we also like to take a look at the retail crowd, which, take a look at euro. You've got the euro very short, pound very short, and these are retail moves. So if the retail traders are shorting these assets, we tend to view that as sort of a bullish signal here at A1 Trading. The way we interpret this data is if retail is very short, and we know that retail traders tend to lose money. Again, this is just from client sentiment at brokerages. We view this as a bullish signal for the pound, for the euro. And so when we go back to that chart for Euro USD and we have this beautiful upward trend, to me, this actually looks like it might be pullback buying opportunities going into today's price action. This is a 4-hour chart, so you might get some time here before it does potentially pull back. But again, this 1.094 level looks pretty interesting to me for continuation buys. And when we drop it down to the 1-hour chart, we can actually see that pretty good as well. So again, we've crested up into the 1.10s again. We may be due for a bit of a pullback, but again, overall, the euro looks really strong, especially when comparing it to the US dollar, which in my opinion, still does fundamentally overall look weak. So we will keep tabs on this. By the way, guys, if you do want access to the EDGEFINDER, let's give out some trials today. We're going to give out some trials for people who would like to test out our software. Again, we're a company in Atlanta, Georgia. We have a team of people here who build software tools for traders and, of course, put on these lovely shows and invite all of our great guests and do all the behind-the-scenes stuff. So, of course, if you enjoy the show, hit the thumbs up button. But also, if you'd like to try out the software here today, here's how you can do so. Click the link that's being dropped in the chat right now, and you'll be directed to a messaging center where you can get connected with someone from our team here at A1. So click this link right here. It's going to let you send a direct message. It looks like this. When you hit chat now, two things. You can either learn about our 50% off sale if you're a regular viewer here and you would like to hear about the sale. Tick this. And then you can also, of course, ask for a trial if you want to check out the EDGEFINDER. And in just a moment, I'll even show you guys, if you're looking to switch brokers, we have a way for you to get EDGEFINDER for free. So in fact, let's go to that now. For those of you guys who want EDGEFINDER totally for free and wouldn't mind switching brokers to our partnered broker, we've got a really cool announcement for you. And then after this, we're going to be joined by the trio, Miko and Marco. So don't go anywhere. Watch this quick commercial break from our sponsors who make this show possible, and we will be right back. Check this out.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with Miko and Marco. How are you guys doing?
Hello.
I'm doing good. What's up?
Not a lot. It's good to have you guys back on. This is like the it's like the panel. It's like the console that we our weekly check-ins together, which is just awesome to have you guys back. Let's jump right in. I've talked about a lot of stuff here already today, so I don't want to speak too much on my end, but I'd love to hear from you guys. Marco, why don't you start us out? Are you watching anything? Do you have any trades open? I guess what's on your watch list today? We'll let you share your screen if you'd like to as well.
Sure. Well, today is a bit slower for me personally. So on the 1-hour chart, I don't have anything on my watch list, I would say. But I kind of expect the euro and US dollar to reverse since it's kind of ascending here on this top. But again, not really a clean structure as I would like it to be. EJ, for me, it's moving up, but I need to see more momentum. So I need to see this momentum continue. Then I will be interested. Right now, it's forming a large wick and an aggressive retrace. AU for me is just range bound in this area, so just waiting it out. AJ also range bound in this general area, as well as the pound has had obviously some news, which I can see with this huge wick up, huge wick down. So after a news candle, I usually get, on the 1-hour chart at least, I get like a larger range. So I'll be looking for a breakout to the upside or to the downside on the pound. And the final one is New Zealand Japanese yen. That one for me is also ascending. So I do expect it to reverse maybe today or tomorrow or maybe next week. But again, I need to see evidence of a momentum down. So to sum up, kind of range-bound markets, not really showing me much conviction. I'm being more patient. I'm just sitting on my hands. Yeah.
Yeah, and we had a lot of news, which has spun up some volatility for several charts. You mentioned the pound there, especially. Of course, the Bank of England chose to raise rates by more than expected today. I was on a podcast interview earlier with uh, uh, some guys, both from the UK, and they were talking about how people who are on variable rates there for their mortgages are just getting really hammered. Of course, because again, if you own a house, the interest rates go higher and higher. And today you get the news that they're just jumping by another, 0.5%. It's a tough time and really quite introduce some serious volatility to the pound pairs here today, whether you're looking at pound yen, pound Swiss, pound dollar, all of them seeing some volatility there. So thank you, Marco, for that. Miko, what do you think? What are you looking at? You have any trades open or charts that you're watching closely?
Yes, I do have a position from last week on dollar Swiss, which I was discussing with you guys last week. Price came very close to my take profit, but obviously the market wanted to do what the market wants to do and pull back against me. So I'm still holding on this position. I've got my stop loss to break even at my entry over there. So it's a make or break with this one. See if we continue to fall and we hit my target, or the market goes back and takes me out of the trade. I'm looking to see maybe if I can get another position onto dollar Swiss. We're coming to some nice areas around here, broken support, turn resistance. If I get some good rejection around here with some good confluences, I may look to add to the position. But right now, I don't like the fact that we are rejecting that support, so I will be a little bit careful. But that's the trade I have open. Again, similar to Marco, I'm not really seeing much at the moment in the market. Gold looks like there might be some sells if we continue to break down, but it's still very choppy. So last week I was speaking about gold because it looked like we started to crack through support last week, but then we climbed back above it. So I said hopefully gold can really break through to the downside or to the upside. I'm kind of neutral on gold. I just want to find a good trade basically. So if gold can really start pushing to the downside, get away from this mess, show me that, okay, the bears are in control, then I will be looking for some corrections and continuations to the downside, a retest of maybe this low, depending how far we push down. So I'm going to keep an eye on gold. There might be some nice sells if we do finally break down. I think silver is breaking down and sometimes they correlate quite well. So maybe that might happen to gold as well. Pound USD, I'm keeping an eye on this one. I was looking for longs, but I don't like the fact that we've just rejected the highs quite aggressively. And of course, we've just had some news for the pound there. So I think I might let things settle with pound USD. But I was coming to the week looking for a break and retest of this high. But the fact that we've already hit the high there and coming down off it is not the best sign. And EURUSD, I'm also looking at some sells. We've got some nice bearish structure of this one. So I'm getting ready for a pullback for some more downside. So I'm waiting for a low high to form around there. And those are basically the pairs I'm looking at for the rest of the week.
Very interesting. Yeah. And Miko, you mentioned just sort of the metals market in general, both getting hammered. But what's interesting, I've got an interesting chart for you pulled up. One of the coolest things about TradingView is that they allow you to do, crosses on anything. You can really just compare any two charts. Anyways, what I've got here is the gold to silver ratio. It's traditionally talked about when talking about the metals market to get an idea of whether or not which one is sort of overpriced or underpriced, or traditionally the idea is that if this thing rises too much, it's saying that gold is perhaps overvalued relative to silver. And if it drops too much, silver is overvalued relative to gold. Anyways, we see today, you mentioned that, Miko, gold and silver both dropping a lot. Silver is actually getting really beaten up right now compared to gold even. So if we take a look at the silver price, silver just falling through the floor. If you were to compare it to the gold price action, right? Gold is just barely underneath its kind of previous low areas of support. Silver, not so much the case. It's fallen straight through the lows. And again, we can kind of compare that to what you had drawn there too, Miko, just this general area of support here. You can see we're just barely underneath it for now. It's really interesting just to watch the metals market fall down so hard. I've made mention to, I think that the high level fundamentals for this stuff is that a lot of central banks are still looking to raise rates, and higher interest rates puts pressure on gold, as we know. And so gold right now is not, yes, this is gold quoted against the dollar, but gold is watching all the central banks, right? The gold market is paying attention to what central bank trends across the world are doing right now. So it's an interesting market to watch. And again, I think that it's just right now price action looks terrible in my opinion for longs. Definitely favors the sellers in terms of the technicals for now. Marco, what do you think on gold? Do you have any opinions on the metals world?
Yeah, so let me check it out. Okay. So for me on the 1 hour, it's kind of moving down, but very correctively in this sort of a descending channel. As I said, for me, gold is just so choppy. So the strategy that I trade doesn't really work on it. But overall, I couldn't pick a direction for you, to be honest. It's kind of erratic for me. I would wait it to settle down a bit, possibly show me some nice consecutive blue or consecutive red candles. So yeah, I would just sit on my hands if I was trading this, because I don't see a clear direction picked. I just see sort of erratic V reversal movements, meaning to me that the sellers are not in control, the buyers are not in control. There's still a big fight going on. That's what I would say.
Yep, no, and that's fair. I mean, at the end of the day, if the chart is too choppy if you're a trend trader and the chart is choppy, this is what I say often, and you guys might feel the same way. A lot of times people will say that they only trade like one currency pair, or they only trade gold, or they only trade the NASDAQ or whatever. And, Marco, if you're able to look at a chart like this and you say, well, you know what, this thing is just not respecting my style. It's not trending well. It's just too choppy. Everything is not following through. I'm going to have a hard time making money here. At the end of the day, it's like when you're looking at this chart, if you were somebody, and many traders do this is why I point this out. Many traders love to just trade gold. And while I think that specializing can be useful, you also have to recognize that there is this temptation if you only trade gold and you want to take trades. If you traded trending markets here, you might not have been able to find good trades for the last 2 months, right? Or 1 month or whatever. So,
Exactly.
if you're going to be trying to actively trade and make money, but you can't trade for 2 months straight, it's going to be hard to make anything. And so what many traders will end up doing is be tempted by the idea of diverging from their strategy in order to place trades and to get involved. So, that's one thing to think about when it comes to trading a particular asset only, or if you trade a basket of things. Miko, do you trade? I know, of course, we talked about several charts and things like that. How many things do you trade in terms of your watch list? How wide does your net go, I guess?
Yeah, it is pretty wide. I trade all Forex majors, minors, gold, silver, and have dabbled in trading Bitcoin, but I don't do it a lot. So mainly just Forex majors, minors, gold and silver. And sometimes I do trade USD peso and USD ZAR as well. So some exotics as well. But it's been a long time since I've traded them. But yeah, for me, mainly the most important thing is the quality of the trade and the setup. So I don't really have too much worry of what asset is I'm trading. I do prefer majors, so I am slightly more drawn to them. But if it's on pound Swiss or gold or USD JPY, I'm not really too bothered. I just want to look for a good setup that fits my plan well and has good market conditions as well, which is trending.
Fair enough. And Marco, to ask you the same question, I know that you trade a confined list. You don't have a ginormous net, but you do have a good diversity of things. You have yen pairs and the dollar. What all do you trade?
Yeah, so 6 of them. Basically, it's EU, EJ, AU, AJ, the pound, and NJ. For me, it covers, let's say, most of the European economy, I would say, or the world economy. You have the euro, you have the dollar, you have the yen, you have the Aussie, which is really important. The Aussie, to me, brings the best percentage. And you have the pound, which is, of course, a big currency pair as well. And then you have NJ, which is more exotic. But because it's more exotic, not a lot of people trade it. So basically, on NJ, I can get in some nice trends. I have found that the less that people trade a pair, the cleaner it moves. So the trends are more sustained. You get longer moves. And I really like it, especially as a trend trader. And I wanted to ask you, Nick, so what percentage of your trading is done on Forex? Because I know you do a lot of gold and S&P. So how much do you actually trade Forex?
Yeah. So for me, I actually trade in terms of two parts. First, I wanted to just say, in terms of your concept with lesser traded assets, can be very, very interesting. Like the Singapore dollar against the US dollar, for example, not a super talked about chart, but some of these trends can be really phenomenal, right? You get these really clean moves.
Yep.
Like Mark was pointing out, I just wanted to offer a visual to what you were saying. But to answer your question in terms of capital allocation, for me, most of my active trading capital goes into my Webull account. And because as a US client, I have that barrier where I can't trade CFDs. Like I can't pull up SPX500 and trade it. I mean, I could if I used like sort of a offshore brokerage, but just using a larger capital basis, I just prefer to keep things in, safely regulated brokerages. So for what that ends up for me meaning is I have to, trade a Forex brokerage, or I have to trade, a stock brokerage or a futures brokerage. So I would say that a good 80% of my capital allocation goes into trading indices, gold goes into trading options. This is where a lot of my capital allocation goes. And the remaining 20 kind of goes into FX. So, and I do trade currency pairs, but again, we've talked about it today. Finding that specialization a little bit is important for every trader. And I just happen to know that you mentioned you like Aussie pairs, Marco. I mean, like for me, I really like the indices and gold. Like that's kind of where I find my specialty. So Marco, you like those Aussie pairs. I mean, you like a basket of things, but you mentioned you really like the Aussie pairs. I like the indices, and I like to trade gold as well. Miko, if you had to pick a favorite, I mean, you mentioned the majors. Do you have any specific major that you like the best?
I'll probably say, I mean, I've been traded Euro USD and Pound USD the most. Those are the pairs that I did most of my learning on. So I probably would say them, but I don't have a favorite, to be fair. Maybe I would drift to the yen pairs a little bit as well, because they do pack a punch sometimes. But yeah, I don't have a favorite. I don't have a favorite. So yeah, very neutral for me.
So your favorite is whichever one is making you money. That's the best answer.
That's 100%.
Cool. Yeah, no, good stuff, guys. And this is why I like having you guys on, because of course we can go through charts and we can do our analysis, but I think that also a lot of viewers here also tune in to us for the commentary and the questions that we toss back and forth. So I appreciate you guys both for coming on. And before you go, let me make sure that everybody who's in the audience with us, make sure to go follow these guys. They have their own YouTube channels. And of course, we always appreciate you guys coming on the show. Miko, Marco, we're going to drop your links in the chat. Guys, make sure to go subscribe to them, and we will see you guys back next time. Thanks so much for coming on.
Thank you.
Thank you.
See you next.
Always good to have both those guys. Miko, Marco, both just great guys. And we always talk about it, but we like to bring on really serious traders who are dedicated to their craft. And you can seriously see that every time we bring those guys on. They know their stuff. They know their strengths. They know their weaknesses. Speaking of weaknesses, man, gold cannot catch a break. Look at this. Gold down to 1921, coming back to retest. It seems like this low of 1919. How's silver doing? I mean, silver and gold both, look at that. Silver under the lows, trading at 22.44, 43 an ounce. 42 even. Wow. 41. Oh my goodness. The metals market is just melting, for lack of a better term. That was really cheesy, but we will take it. Yeah, gold is just not catching a break here, breaking clean through support. Question is, how much further can this thing go? And I think that, what you have to acknowledge is that, okay, this low marked a really key bounce for the gold market. But if it's able to break through these lows, we very well could slip another good bit, right? So we have to be very careful with this. Again, right now, gold is not something I'm looking to buy by any means in terms of a short-term trade. If you're longer term, if you're putting in your portfolio, that's a conversation for a different day. If I'm buying gold or silver for the long term, I'm buying it when it's low and for a long period of time. But if you're trading this thing, it very well could swoop back and continue and swoop back and continue. And again, I think that the sellers are just in control of this market based on the price action that we see going on right now. So yeah, we're going to have to keep eyes on this. I'll probably have a video out later discussing gold. So keep an eye on that, guys. And remember, if you do want to see all of the trades that I'm taking, we are ending our 50% off sale right now. And let me show you just a little bit of that in case you haven't heard about that. Our trade alerts, our chat rooms, and our coaching webinars, all of it is a single purchase. If you'd like to get into our membership group, it is 55% off if and only if you message our support team line right now while we're on the air. Here's how you can do it. Right below me here, we're going to pop up this image right here, 55% off of our VIP Discord. I'm going to give you guys just a quick tour of what that looks like. So inside of the group, I'm going to pull this up. Inside of the group, you get some cool stuff. If you're a member, of course, number one, the coolest thing is you're supporting our channel here in our live streams. We sell memberships and they're packed full of value. It is an excellent place to be if you're considering, stick around for a minute with me and I'll tell you about the membership and how you can get 55% off. Let me tell you about it. Okay, first thing you should know, you get access to all of the trades that we share inside of the Discord. So I mentioned lots of stuff here. I trade FX, I trade currency pairs, of course, right? I trade gold, I trade indices, and I trade options. Frank, my right-hand man, who you guys, if you watch the show regularly, you know Frank. Frank trades, he trades FX, gold as well. He also trades stocks. So if you guys are interested in any of those, by joining our VIP, you'll get access to all of those trade alerts. So whenever we make moves, you guys will see those moves in here with full breakdowns. Now, traditional services, signal services, what they do is they simply just give you this component. They just say, hey, buy this or sell this. We are not here to do that. Inside of the group, what we do is we treat this as our trading journals. So essentially, by becoming a member, you get access to our complete trading journals. Everything from why we enter the trade, why we exit the trade, screenshots of the analysis, breakdowns, education, all of it is something that we work very hard to provide a lot of value to members. Right now, we are doing more than half off of our memberships if you message in to our support line while we are here on the line. If you'd like to get access to the trade alerts, we also have chat rooms available so that you can chat with other members. We have conversations every single day with people around the world. It's a lively chat room full of serious traders. No get rich quick stuff, no hype, people who are genuinely sharing. I'll show you guys. I mean, we're in here every day posting charts, analysis, commentary. People are asking questions. We have incredible discussions. And of course, we have Jerome Powell paintings that are terrifying, right? You get all of it, including the Jerome Powell pictures. Anyways, we have coaching webinars as well, where we answer coaching questions with Ivan, who runs those twice a week. You also have an educational section where you can read our strategies in depth, go through some videos, that sort of thing, so on and so forth. Again, if you've been thinking about it, the reason I'm going in detail today is because the sale is ending, and this is going to be your last chance to get more than half off of a membership with us and keep the fun rolling. I mean, a lot of you guys watch these shows and then, you're gone, but really the fun continues. We have a Discord channel that is exclusive to members. And so if you want access for 55% off, message us. We're going to drop that link one more time. And there you go. So click this link and this is what it will look like. When you do click that link, pulls up right here. Click chat now, 50% off, and you'll be connected with a real person on our staff who will get you set up with a membership. So there you go. Click that and you should be all set. And you get half off any of our memberships. Monthly, we have a 1-year membership, and we have an unlimited one-time payment if you'd like to join us for good. And there goes gold yet again, continuing down lower. Anyways, guys, thank you very much for tuning in to today's live stream. I hope you got a lot of value out of it, and we will see you back next time. See you later. Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show.